Welcome back. Let's take a breath, slow everything down, and be realistic for a moment because a lot of people are heading into this week with expectations that simply don't line up with how markets actually behave. If you're coming into the next few days expecting fireworks, explosive upside, or some sudden surprise breakout for XRP, there's a strong chance you're going to feel disappointed. And that doesn't make you bearish. It just means expectations need adjustment. That's not negativity, that's honesty. Right now, XRP is sitting in what can best be described as a holding pattern. Not because there's something wrong with the asset, not because fundamentals have vanished overnight, but because the broader market is waiting. And when markets are waiting, price action usually stalls, drifts sideways, or leaks slightly lower as traders pull back risk and stay cautious. That is exactly the type of environment we are stepping into this week. This is one of those weeks where nothing dramatic has to happen for people to feel uneasy. Sideways price action frustrates traders far more than volatility ever does. A slow grind, small red candles, weak bounces, and no real follow-through tend to wear people down emotionally. That's often what shakes participants out, not sharp moves. That's why setting expectations ahead of time matters far more than reacting afterward. Early in the week, the spotlight isn't even on crypto. The focus is macro data. We have multiple government reports coming out that markets haven't had clear access to recently due to the shutdown. Jobs numbers, CPI, and other economic releases are stacked together, and markets do not like uncertainty around inflation and labor conditions. Until that data is released and fully absorbed, risk assets usually remain muted. Tuesday is the critical day for those reports. Until then, there is little incentive for large capital to push price aggressively in either direction. You may still see movement, short-term volatility, and minor pushes up or down, but nothing that resembles a real trend. That's why expecting a strong XRP move early in the week simply isn't realistic in this environment. XRP has been trading around the same general zone, roughly near the $2 area. The key thing to understand is that this zone has held. Support has been respected unless something external forces the market's hand. In other words, XRP itself is not breaking down. It's waiting, just like everything else. This is where many people misinterpret what they're seeing. They look at inactivity and assume it signals weakness. That's not how markets function. Periods of low activity often come right before volatility, especially when a known catalyst is approaching. Price compresses, volume fades, traders get bored, and then something forces a decision. That leads us to the real reason this week matters, and it has nothing to do with XRP-specific headlines. The main event isn't today or tomorrow. It's Friday, when the Bank of Japan takes center stage. This is not a minor central bank that can be ignored. Japan plays a massive role in global liquidity through what's known as the yen carry trade. If you've been watching markets over the last few years, you already know that when the Bank of Japan makes a move, risk assets feel it, sometimes sharply. The market knows this. Institutions know it. Traders know it. That's why caution dominates right now. Nobody wants to load heavy exposure days before a potential liquidity shock. That's how positions get caught on the wrong side of macro moves. So when we say nothing major is likely to happen this week, what that really means is this. Until macro uncertainty clears, price action is likely to remain constrained. We could see some downside pressure as traders reduce exposure ahead of Friday, but that does not mean something is broken. It means the market is positioning. This is the kind of week where patience matters more than prediction. You don't get rewarded for being early here. You get rewarded for being prepared. Understanding why price isn't moving is far more valuable than forcing trades when probabilities are simply not in your favor. Now let's focus on the real driver this week, because this is where many people either oversimplify things or completely misunderstand what's actually at stake. The Bank of Japan decision on Friday is not just another routine rate announcement. It's directly tied to one of the largest and longest-running liquidity mechanisms in global markets, the yen carry trade. For decades, Japan has maintained near-zero interest rates, not just low, but effectively free. That allowed institutions to borrow massive amounts of capital in yen, convert it into US dollars, and deploy it into higher-risk, higher-return assets. Stocks, real estate, bonds, and yes, crypto all benefited from this flow. This wasn't a fringe strategy. Trillions of dollars moved through this system over time. The key point is that this liquidity didn't come from optimism or narratives. It came from simple math. Borrow cheap, invest where returns are higher, capture the spread. As long as Japanese rates stayed near zero, the trade worked. It flooded global markets with capital and pushed investors further out on the risk curve. That's part of why tech stocks, crypto, and speculative assets ran as hard as they did in previous cycles. The moment Japan raises rates, that math changes. Borrowing is no longer free. Positions that once made sense become less attractive. When that happens, institutions don't debate stories or sentiment. They reduce exposure. They unwind positions, manage risk, rebalance portfolios, and prepare for higher funding costs. We've seen this before. The last time the Bank of Japan raised rates in July 2024, Bitcoin dropped more than 20% in a relatively short period, and XRP, along with the rest of crypto, followed. Not because those assets suddenly became bad investments, but because liquidity was being pulled from the system. That distinction is critical. What makes this week difficult is that the market already expects a hike. December 19th has been on the calendar for some time. The uncertainty isn't whether the Bank of Japan acts, it's how aggressive the move will be. The discussion ranges from 25 basis points to 50, or even 75. Each outcome carries very different implications. A smaller hike is something markets can likely absorb without major disruption. A larger move, especially something as aggressive as 75 basis points, would signal serious tightening. That's when broader risk-off behavior tends to emerge. Stocks feel it. Crypto feels it. XRP is not immune, regardless of long-term fundamentals. This is where another common mistake shows up. People hear that XRP could drop and immediately assume something is wrong with XRP. That logic is backwards. A macro-driven drop has nothing to do with the asset itself. It's forced selling, panic, and risk reduction. Price moves because capital is repositioning, not because a project failed. Those moments are often the most important to understand. When price drops for reasons unrelated to fundamentals, opportunity begins forming. But you only recognize that if you understand the mechanism behind the move. Without that understanding, reactions become emotional instead of strategic. Right now, the market is firmly in wait-and-see mode. Traders are cutting leverage, institutions are cautious, volume dries up. That's why price feels stuck. It's not weakness, it's positioning ahead of a known macro event. Once that event passes, the market can finally choose a direction. Expecting clarity before Friday is unrealistic. It won't happen. Until the Bank of Japan decision is behind us, price action is likely to remain choppy, slow, and slightly biased lower as risk is hedged. That's normal. That's healthy. The takeaway is simple but important. This week is not about chasing moves. It's about understanding why moves aren't happening yet. It's about patience, not prediction. Macro-driven volatility creates opportunity, but only for those who are prepared, not for those who panic. Now let's walk through the scenarios, because preparation always beats guessing. Once Friday arrives, the waiting ends. Markets won't instantly turn bullish or bearish forever, but they will stop guessing, and that alone can trigger movement. The first scenario is the least dramatic, a smaller hike around 25 basis points. In that case, the market likely exhales rather than rallies. XRP would probably hold support, maybe bounce modestly, and then settle back into range as traders reassess. It's not exciting, but it's constructive. The second scenario is a more meaningful 50 basis point hike. This confirms tightening without shocking the system. Typically, that brings a knee-jerk sell-off followed by stabilization. XRP could dip, break short-term support, and test lower levels, not because of weakness, but because liquidity is being repriced. These moves scare people out and reward patience. The third scenario is the one people don't like to talk about. A 75 basis point hike. That would likely trigger broader risk-off behavior. Stocks sell off. Crypto sells harder. XRP gets dragged mechanically. Price drops quickly. Sentiment turns ugly. Timelines compress. And this is where many people get it wrong. A macro-driven sell-off does not invalidate a long-term thesis. It reflects forced selling, not structural failure. Levels reached during panic are stress levels, not fair value. Zones like the mid-170s or lower would signal pressure, not collapse. Stress-driven moves often overshoot. Markets don't stop neatly where it feels comfortable. What matters is why price is there. Macro pressure is temporary. Structural damage is not. All signs point to macro pressure. That's why patience is such an edge in weeks like this. Most traders feel compelled to act. In reality, waiting for confirmation often prevents bad decisions. There's no reward for guessing before Friday. There is value in reacting calmly afterward. Liquidity events create sharp moves, not endless ones. The better question isn't whether XRP goes up or down this week, it's whether the move is emotional or fundamental. If you understand that, you stop reacting to candles and start thinking in probabilities. Once Friday passes, the market can breathe, trends can form. Price action can regain meaning. Zooming out, weeks like this are normal within a larger cycle. Markets pulse. They expand, contract, reset, and expand again. Macro uncertainty slows everything down. Central bank activity makes capital defensive. That doesn't mean long-term bearishness. It means risk management. Crypto feels this first because it's liquidity sensitive. Overreacting to macro-driven pullbacks is dangerous. These moves reflect capital flow, not adoption failure. For long-term XRP holders, mindset matters. You're not trading every candle. XRP's relevance isn't defined by a single week. Pullbacks driven by rates often create asymmetric opportunity because they feel uncomfortable. Liquidity events overshoot, selling exhausts, price stabilizes before sentiment recovers. Discipline matters more than conviction. Discipline respects risk. Blind conviction ignores it. This week is not about being right. It's about not being reckless. Let uncertainty pass. Let data arrive. Let price reveal itself. No single candle defines a trend. Macro events create volatility, not value. Keeping perspective prevents emotional mistakes. Everything discussed here is for educational purposes only. This is not financial advice. I am not telling you to buy, sell, or hold XRP or any asset. Markets involve risk. Do your own research. Never invest money you can't afford to lose. If you stay patient, informed, and disciplined through weeks like this, you are already ahead of most participants. Let the noise pass. Let the data come. Let price show its hand. That is how you navigate periods like this without burning out or damaging your strategy.